Peter Cardillo is now joining us on the phone line. Peter, what's your perspective? What's happening? The way the correction is happening, what is the sense that you get? Markets are really trying to price in something which is uncertain.
Yes, I think the markets are trying to price in a real slow growth ahead and possibly even negative growth. I mean, if you look what happened with the bond market today, we saw yields making new record lows right across the board. The 10-year, yielding down to 128, and of course, what happened in the stock market. And I think, now that we're in correction territory, that we still have further to go. I wouldn't be a bit surprised to see this market fall another 3, possibly 5% before it catches its breath. And I say that because if you look at the VIX index, you'll see that it reached highs that we haven't seen since almost 2008. And that just means a lot of volatility and uncertainty are going to grip the markets in the coming days. So tomorrow, obviously, could be another rocky session. And if we get no relief rally, then I would suspect that, we could decline by 3 to 5% rather quickly. So tomorrow is a crucial session.
When you just talk about the velocity in which the markets are falling, what is it telling you? Suddenly from a risk on, the markets have gone into a risk-off mode. How dangerous could this velocity of the fall be for the coming weeks?
Well, it could be very dangerous. But again, you have to realize that it's the coronavirus. But behind the coronavirus, there is another factor here. And even though the markets, have been quite strong and we've had a lot of momentum buying, you have to realize that the global economy has been slowing. And why has that been slowing? It's been slowing due to the trade war. And one of the reasons why I believe that the market basically ignored that was the fact that the huge corporate taxes that the administration enacted basically backfired. And why did that backfire? Well, it's very simple. The corporate America decided, because of the trade war uncertainties, not to invest in capital spending, but buy back their stocks and raise their dividends. Well, there's the reason why we had such a powerful stock market. And now with this coronavirus and the global economy already in, you might say, a weakening mode, this complicates matters.
Just a word as far as even other asset classes are falling. What do you make of that? Crude is falling. You mentioned 10-year bond yields. Emerging markets are falling. You think it's an all-across board or all-across derating that we are seeing across asset classes except gold?
Absolutely. And, I recently wrote in commentary a couple of weeks ago that the fact that the Russians were not basically in agreement with the Saudis to propose further cuts, I think I said that it would be necessary at that point for oil to really plummet. And I suggested that perhaps a $45 price would twist the arms of Russia and for the Saudis to get aboard with Russia to get aboard with the Saudis. Now, it's obviously the fair factor there is that if the economy if the global economy should slow to sub-level growth or even negative growth, then less demand from the emerging markets and certainly from China cannot be ruled out.
Right. Overall, of course, what's happening with global spread of virus is something which nobody can predict or nobody can say. But say if this continues to spread, you think the derating in the markets would continue, or now majority of the risk also seem to be factored in?
Yes, I think so. And until we see some sort of a peak here, and the problem is that we're not seeing a peak outside of Asia. We're seeing numbers beginning to climb. In fact, there was news out that California is monitoring 8,300 patients, something that I think really spooked the markets today.
Right. Thank you, Peter, so much for taking our time for us. Always good to get perspective from you.